Hi, welcome to Comparic. I'm here today with Athanasios Psarofagis, ETF analyst at Bloomberg Intelligence. Hi, it's nice to have you here.
Hi, thanks so much for having me.
ETFs are gaining traction and attention of investors. Did they increase in popularity during the pandemic times?
Yeah, so this is very interesting, and especially during pandemic, which you bring up is when markets get very volatile, one of the first places people turn to is the ETF. And the reason is that it trades on an exchange, right? Very different than, say, a mutual fund or some of these other commingled funds. So when the markets get very volatile, they depend on these liquidities either to get out of a fund or to make changes very quickly. And so what we tend to see is during very volatile market periods, during COVID in March 2020, you saw a really aggressive spike in flows. So anytime the market is very volatile, they turn to the ETF. And there's always this criticism that comes out, and people say, well, the ETF hasn't been tested and whatnot. I think that's false now. I think the ETFs have been around for so long. They've lived through all these different regimes, the financial crisis, COVID, all different market environments, and they've sort of really stood the test of time. So I actually think that when markets are really volatile, that's actually a pretty good thing for ETFs because people really like that tradability and they like the transparency of it. So they tend to do really well actually when markets are volatile.
So you mentioned actually one of the biggest advantages of ETFs, which is their relatively low volatility. What are some of the other advantages?
So overall, I'd say the biggest trend, and it's not even about, ETFs tend to be index investments, right? They're synonymous with index investing. So it's even less of a debate of active versus passive investing. It's really about cost. And ETFs, just in general, they're cheaper to run. They're indexed. There's a lot of competition in this space, which is bringing down cost. So really, the main driver of flows and the interest in ETFs is cost. That's what it really comes down to. And where I'd say it's most established is in the US market. They're very, very low cost. But you're seeing that now starting to expand in other markets. And when you look at Europe or Asia Pacific, there's still sort of these old rules about how salespeople are compensated and what products they're trying to put you in. I think when those walls break down, you're going to see an acceleration of ETFs even faster. But they are very cheap. You can build a cheap global ETF portfolio in Europe for anywhere from 8 to 11 basis points. So already you can see that the low cost trend is already even happening in Europe. So I'd say one of the biggest advantages, if not the biggest advantage, is cost. And some of the other things we mentioned, tradability and liquidity is another big advantage, and transparency. ETFs, you can see what they hold every single day. People like that. Whether or not you're looking at it, that's a different story. But I think investors always are going to lean towards having more transparency than less. So those are really some of the big key advantages of the ETF structure.
And how big is the ETF market in the US? What kind of numbers are we talking about here?
So in the US, it's about 7 trillion. Globally, we're at about 10 trillion. So as you can see, the US is about 70% of the market. So it is definitely the biggest market. It's the most mature. But what I've been noticing this year, what I think is really interesting, is the flows are very strong. This last year was a record in flows. There's over a trillion had come into ETFs globally. This year, it's on a very strong pace, but most of the growth is coming from the global markets, meaning Europe, Asia are actually growing even faster than the US. So I just think eventually the US market might just hit a point of maturity because it's so much larger. But I really think that where there's a lot of growth still to come is going to be from the global markets. So Europe is growing, like I said, very, very quickly. There's new entrants that are coming into the market as well, not only from the US, but there's a lot of European firms that haven't launched ETFs yet, and they're now starting to look at it. So 10 trillion, that number is going to continue to grow. I think as people focus more on cost and there's some regulatory changes, all this is going to really support the growth of the ETF.
The times now are uncertain. The times now are uncertain, and the latest GDP data from the US is kind of weak. Actually, we have elevated uncertainty. There's some talk about possible recession even coming next year, though lately it was just speculation. Now more and more analysts are keeping talking about it. So some investors would like to play it safe during recession times. Are ETFs a viable option for this kind of value investing?
Oh, absolutely. What's been so great about the ETF structure is the number of products. So I actually just looked at this recently. 500 new ETFs have come into the market in the last 12 months in the US. We have almost 3,000 different ETFs in the US, just as many in Europe, another couple thousand in Asia. The point I'm trying to make is there's so many different strategies, right? And so there's always going to be something that's working in a certain environment. So if someone is scared of an economic slowdown, there are low volatility ETFs, there are value ETFs, there are high quality ETFs. There are so many products now that there's always going to be something that's working. And let's say then if the economic regime changes, there are products that can take advantage of that. There's fixed income, there's commodities, which have been doing very well. So that's what's so great about it, is that there's always going to be something that's working. When you track the flows, you can see, people positioning based on their market outlook. But just given the breadth of product that we have right now, there's options really for any type of strategy you want to implement: alternatives, commodities, equities. So that's what's so great about it. There's always going to be something that's working from a trade or an investing perspective in the ETF market.
You mentioned commodity ETFs, and gold is an investment classic. Kind of an option is looking into gold ETFs, and what's the demand like when we're speaking about gold ETFs?
This year it's been very, very strong. I think if last time I looked, in Europe, I think gold is either the first or second highest in terms of flows this year in Europe. GLD, which is another gold ETF in the US, is taking in quite a bit. Commodities and precious metals have been doing really, really well this year. A lot of it is on the back of inflation picking up and investors being a little bit more worried about inflation. Gold and commodities tend to outperform during that period, and you're seeing it in the flows. But gold ETFs for sure are probably the biggest beneficiaries right now. Even last month for commodities, when I looked in Europe, it was actually their strongest month ever for inflows. So you're seeing that people are allocating into commodities just based on the current environment. But gold tends to be one of the most popular. It's those and oil ETFs as well. But they are for sure at the top of the leaderboard this year.
And what about ESG ETFs? Because environmental and ecological trends are becoming more and more prevalent. And we have kind of a big campaign here in Poland. Warsaw Stock Exchange is promoting ESG investing through different venues. Is this kind of a global trend? What are the options for investing with ESG ETFs?
Sure. ESG is one of the biggest trends, and it's probably the single biggest trend in Europe for sure. There is big tailwind behind it, and that's regulation. They passed something called SFDR a year or so ago in Europe, which now requires funds to disclose how ESG they are. And if you look at the launches in the European market, more than half of every new launch that comes into the market has some sort of ESG mandate. This is much different than the US, where ESG is popular for sure. It's not quite to the level that it is in Europe. But I actually do think that Europe is leading in this market, meaning that the US is likely going to mimic what Europe has been doing. The SEC is looking pretty aggressively at increasing disclosures for funds, and you're seeing more and more ESG products launch in the US. But Europe for sure has the regulatory backing. And if you look at flows, about 40 to 50% every month of all the flows that come in go to some sort of ESG product. So that is by far the biggest trend. And in terms of a product set, that's massive. Like I said, almost about half the products in Europe are ESG, and it's both asset classes. There's equity, but across all different exposures. If you want U.S. exposure, Europe exposure, emerging markets, etc. But now there's a lot of fixed income launches, green bond ETFs, or ones that are aligned with the Paris initiatives called Paris-aligned ETFs. There are a lot of ESG options, and there's some great tools. If anyone has a Bloomberg terminal, we have all the classifications on there as well. But for sure, ESG is by far one of the biggest, if not the single biggest trend in Europe.
This May, so slightly more than a week, you will be a guest at Warsaw Passive Investment Conference organized by Warsaw Stock Exchange. You will be a keynote speaker there. And what message do you have for Polish investors?
Yeah, well, I'm really excited about that, and I was very happy and humbled that they asked me. If you couldn't tell by my name, I'm Greek, and like I had mentioned, in the U.S., there's a lot of coverage, and passive is much more widely known. Where I think a big initiative needs to happen is in other countries, like Poland, like Greece. So I was very happy when they asked me to do it. So the real message is it's really gaining awareness and letting people know that how the ETF works, getting them comfortable with it, understanding active versus passive, and it's not saying that one is necessarily better than the other. It's just what are your goals, right, and what are you trying to achieve, and those lines are getting very blurry because there's a lot of active ETFs now, right? So it's not necessarily just active or passive anymore. But really, the message I want to try to get across is just letting people know about the ETF structure, raising awareness, helping with education, letting them know what are some of the biggest trends in the market, what they should be looking for. So I'm very excited for it, and I'm glad that they're taking this initiative to really spread education about the ETF and about that market. And I hope others follow suit.
Athanasios Psarofagis, ETF analyst at Bloomberg Intelligence, was a guest here at Comparic today. Thank you for this nice conversation and see you in Warsaw.
Sounds good. Thank you very much.